Chamber of Commerce sponsors include the Las Cruces Sun News, Comcast, Memorial Medical Center, and the Las Cruces Bulletin. Local programming on KRWG is possible in part by support from viewers like you. Thank you.
I'm Fred Martino. Thanks so much for joining us for the Chamber Economic Forum, and special thanks to the Greater Las Cruces Chamber of Commerce for partnering with us on this event. Our guests are from New Mexico State University, Dr. Jim Peach covering the national economy, Dr. Chris Erickson with a look at New Mexico and the region, and Dr. Ken Martin brings us up to date on the financial markets. We're going to get to our audience questions in just a few minutes, but first we have opening statements from our guests. Dr. Peach, good evening.
Thank you, Fred. It's great fun to be here. I don't know if you realize this or not, but we're starting our 5th year of this.
I am glad we are doing it because
yeah.
this, especially, it seems like every time we do one of these, it's a big week in the news for financial markets and the economy.
And it's always great fun, and I thank KRWG and the Chamber. Forecasters rarely like to be out on the edge, and there's kind of a consensus forecast right now that we'll have real GDP growth of somewhere around 2.1 or 2.2% for 2012. And surprise of all surprises, that's just what it was in the first quarter of this year. It was 2.2%, and they're all clustering around that right now. And I'm going to give you some reasons why I think it's going to be higher than that for the year, and especially by the end of the year. First, we've had 11 consecutive quarters of positive real GDP growth. GDP is now larger, just barely, but it is now larger than it was in the fourth quarter of 2007 when we started the recession. So we've come a long way in a long time. It has been a long time, but we're on the road back. Industrial production increased in April by 1.1%, and it's 5.7% above where it was a year ago. In fact, it's now 97.4% of where it was when we started the recession in December of '07. So we've come a long way on industrial production. That's also reflected in capacity utilization, which is now 79%. That's not bad. We usually run in normal times somewhere between 80 and 85, but that's 3% higher than it was a year ago. Housing starts, the data came out just this morning, increased by 2.6% last month, 2.3% for single-family housing starts. The Builders' Confidence Index is at a 5-year high. Total housing starts are 29% above where they were a year ago. Single family, about 18.8% above where they were a year ago. Now, those were very depressed levels. We're still not back to normal, but those are large percentage increases. Automobile sales are in the United States and actually throughout North America are doing very, very well. We've had 20 consecutive months of increases in automobile sales. We're likely to hit 14.5 or 15 million units sold in the United States this year. And if you think about it, in '09, we were down to just below 11. So we've come a long way. A few million automobiles per year is a lot. It means a lot. And Chrysler is the company that was in the most trouble during the recession, is leading the pack in percentage gains in sales. They've increased their sales this year 35% over what they were this time a year ago. We've had 18 of the last 19 months, we've had increases in employment. Actually, we've had in all of the last 19 months, from October 2010 to April 2012, we've increased non-farm employment by 3.1 million jobs. and about 1.9 million in the last 12 months alone. Education and healthcare services employment has been strong throughout the recession. That's likely to continue. We've had manufacturing employment that has increased in 18 of the last 19 months. And that's really significant. Inflation is low. The consumer price index, the latest release, is 2.3% over this time a year ago. The producer price index is 2.4% on all manufacturing industries. Oil prices are falling. West Texas Intermediate this morning was down to 92.50, down about $20 from its peak in March. Natural gas prices are ridiculously low, $2.50 per thousand cubic feet. Just silly low. The GDP deflator increased by only 1.9%, Q1 of this year over Q1 of the year before. Excess reserves in the banking system are still high. There are 1.48 trillion with a T, dollars. But that's come down over $1 trillion in just under a year. And so we're moving in the right direction on excess reserves. As long as banks have reserves that they are not lending, it's not a good sign, but we're moving kind of in the right direction. Interest rates remain just extraordinarily low. The 10-year T-bill rate this morning was 1.79%. And that's also a good sign for economic expansion. So all of those things together, and more that I could do if you want me to take their time, which I'll be glad to do not indicate to me that the economy is about to fall off the cliff again. And we've heard a lot of gloom and doom in the last month because we've had some stock market volatility and the like. I see two main dangers right now for the rest of this year. One is the silliness over the deficit, the federal deficit spending. And I call it silliness because the arithmetic is clear. If that's a problem, we know how to fix it. And it has to be some combination of spending cuts, tax increases, and some economic growth. We've had the Simpson-Bowles Commission, we've had the Domenici-Rivlin Commission. We know how to fix that problem. That is not an insurmountable problem. People worry about that more than they should because we really genuinely know how to fix it. If we get in trouble over that, it is a self-inflicted wound. It really, really is. The other wild card, of course, right now is Europe. And I think we'll get over that as well. I don't think it's in Germany's best interest for the Eurozone to break up. They are right now the biggest player and the second biggest economy in the world. If the Eurozone broke up, Germany would be a modestly large player, but not a dominant force in the world in either economic terms or political terms. Right now, they have a lot of power going for them. Break up the Eurozone and they do not. And France and Germany combined are certainly strong enough to bail out Greece if they need to. I don't even think it's in Greece's best interest to try to leave the Eurozone right now. So I'm optimistic, and we can come back and talk about that, and I'll turn it over to my colleague, Chris Erickson, who will talk about the state and local economy.
Yeah. Thanks, Jim, and thanks to KRWG for having us in. I've always enjoyed these talks, and I enjoy people's, the audience participation. I look forward to that. Well, the situation in Las Cruces is positive. We've had the strongest year-over-year growth this month that we've had since we moved into recession. Now, of course, Las Cruces moved into recession about a year after the national economy, but our growth rate in this current month, year over year, that is compared to a year previously, was 1.5%, solidly into recovery and getting up back towards the kind of growth rates we had before the recession set in. Not only that, but it turns out last year was better than we thought it was, because when they revised the data, a year that we thought had been a year with no economic growth in terms of employment turned out to be a year with modest but still positive economic growth. So we've been out of recession now in Las Cruces for about a year, and we seem to be moving into that more normal territory we have in Las Cruces of reasonably rapid growth, 1.5% to 2% employment growth on an annual basis going forward. Now, of course, the major positive in our community right now is the Union Pacific Intermodal Transportation Hub down the southern part of the county, and that's currently under construction. When it's completed, it'll employ about 400 people, and it will serve as a engine of growth for that part of the county. It'll be a place that will attract manufacturers. Some of those manufacturers will locate in Mexico on the other side of the border and then use the Santa Teresa crossing to come over. But in any case, that should generate jobs going forward far and away beyond the jobs that are directly created by the Union Pacific operation. On the negative side, we have the end of the base realignment. As you may recall, base realignment was the process by which a number of military bases in the United States were closed, and the soldiers stationed there were reassigned to other bases. And of course, Fort Bliss was one of the major beneficiaries of that process, gaining about 30,000 troops. And the consequence of that has been a boon to the southern part of the county. Of course, El Paso is where the troops are mainly located, but still you have a spillover effect into Las Cruces. So that realignment is finished, and so that was one of the sources of our sustained growth over the last 5 or 6 years, and that's coming to an end. Another negative for the region is government spending. State spending in particular is down. Spending on higher education is down 17%, and on K through 12 it's down 8%. And I also mentioned that our local economy is doing pretty well. Well, that's unless you're a construction worker or in real estate. And of course, construction and real estate continue to drag behind the rest of the economy. That's true at the national level, that's true at the local level. Then Jim mentioned briefly the federal budget deficit. Right now, scheduled for December 31, are a series of tax increases and spending cuts, and the impact of those on New Mexico is likely to be quite severe. Right now, New Mexico is the third largest recipient on net of federal spending. We receive about $9,500 per person more from the federal government than we pay in taxes. Now, a lot of that spending is up north at the national laboratories, but some of it is also here on campus and out at White Sands. That university to the north, which I never mentioned their name, by which I mean UNM, has estimated that if the current law takes effect December 31, it will cost 20,000 jobs in New Mexico. Natural gas, Jim mentioned the natural gas prices are ridiculously low. Of course, that's a negative for our state because we're a natural gas exporter, and we're running, and that's an important source of revenue for the state, which is severance tax. State budget, that looks pretty good. Revenues through February were up 7.8%, and that's more than 6% ahead of what had been forecast. So the state budget should be, or the state legislature should have an easier job this year than they've had the last couple years when they faced budget shortfalls.
Okay, and now we move on to the financial markets and Dr. Martin.
All righty, thanks Fred and Chris and Jim. And thanks for everyone for being here. It's a pleasure. to share with you. I'd like to rewind just a little bit and go back to the last time we were here, which was August of 2011. The Dow Jones Industrial Average was at about 11,000. There was a lot of turmoil politically over the debt ceiling debate. Standard & Poor's had just cut the credit rating of the U.S. Treasury by one notch to AA+. There was a lot of concern about the economy potentially falling into a double-dip recession, and again, Europe was in the headlines with turmoil, not just Greece, Italy, Spain as well. Well, today, the Dow is at about 12,660. That's about a 15% gain from August. But that kind of masks a little bit of volatility. The market continued to fall in the early fall. It bottomed in October at about 10,500, and it peaked in April at about 13,300. It's about a 25% from bottom to top move. The Standard & Poor's 500 and the NASDAQ indexes did even better. They had about 30%, over 30% moves from bottom to top. And the star of the show was Apple, which practically doubled, more than doubled from last summer, about $300 a share to over $600 a share at its peak in April. So the question is, why this great performance? And can we expect more of it? Well, I have 7 things written down to talk about with respect to why the great performance, and then I have 6 things on the headwinds list, and believe it or not, Apple is there too. So first, the European Central Bank stepped in with a long-term refinancing operation to inject liquidity into banks in Europe, and that seemed to settle the nerves down a lot of investors. And so at that time, the European situation did not seem as dire as previously. The Federal Reserve in the U.S. Continued to ease with its Operation Twist, which held down long-term interest rates and had the effect of moving investors into the so-called risk-on trades, that is, into stocks. The U.S. economy, as we know, did not double dip into recession. The economy continued to grow, as Jim talked about. Jobs continued to be created. Unemployment rate continued to come down. Not as much as we would like, but it still did not double dip into recession. Earnings have been fantastic. S&P 500 companies are close to all-time highs in terms of earnings. In the first quarter, about 2/3 of the companies beat their earnings estimates. Profit margins are very high, about 8.5% versus 6% historically. And earnings continue to grow. So thing number 5 is valuations. Valuations on the stock market do not look stretched. Price-earnings ratios are in line with historical averages. Number 6, volatility has not been extreme. It too is in line with historical averages. And thing number 7 is history. History is on the bulls' side. In February, Barron's ran a front page story with the headline Dow 15,000. And there's an interview with Jeremy Siegel, a finance professor at Wharton, who has also authored a book, Stocks for the Long Run. And what he notes is that when stocks have had as bad of a 5-year run as they had from 2007 to 2011, it was in the lower quartile of all 5-year periods since 1871. In 2/3 of the time, stocks are 12% higher 2 years later. 50% of the time, they are 20% higher. So if that 20% plays out, then it could be Dow 17,000 in a couple of years' time. Okay, so not everyone agrees that stocks will be up like that. There are some headwinds. One is the bad Goldilocks economy, as it's being called. The economy is strong enough to keep the Fed on the sidelines. Operation Twist ends in June. So there's no QE3 that's being signaled by the Fed right now. But the economy is not strong enough to create the jobs and the growth we want. So they're calling it the bad Goldilocks economy. There's still pain in Spain. Greece is on the edge. There have been massive amounts of money leaving Greek banks. On Monday alone, nearly $1 billion was withdrawn from Greek banks. Many countries in Europe are in recession. There are fears of spillover effects, as Jim alluded to. And China's growth is slowing down. Number 3, U.S. interest rates are falling. Now, while that might be good news for the stock market, that also may reflect some fears about growth going forward, particularly in Europe. So probably some European investors going for the safe haven of the U.S. Treasuries. Number 4, the Apple effect on earnings. Apple had an unbelievably blowout quarter in the first quarter. Their revenues were up 59%. Their earnings per share were up 92%. If you take Apple out of the S&P 500, the growth rate in earnings doesn't look quite so good. The earnings were up only about 4% rather than about 9% with Apple in there, versus 12% growth in last year's first quarter. Thing number 5 is the fiscal cliff, or what some people are calling tax-mageddon, that Chris referred to. And thing number 6 just happened this past week with JP Morgan's $2 billion trading loss. Now, JP Morgan has a $2 trillion balance sheet in assets. So $2 billion, while that's a lot of money, for an organization of that size, it's not going to rock their financial boat. But what it does do is hurt investor confidence. JP Morgan is reputedly the best run of the big banks with the best CEO among the big bank CEOs. And for him to have to go on national television and Meet the Press and talk about what an egregious mistake that they've had in the risk management, investors have thrown up the caution flag with financial stocks this week, and they've sold off quite a bit. So those are the headwinds, and so we'll open it up.
Absolutely. We'll open it up to questions. One thing we've certainly learned from this recession is apparently iPads and iPhones are recession-proof, right? Apple, very interesting situation. And we would like our audience members to come to the microphone. We hope that for the rest of our hour together, we'll have questions from the audience. If you could just say your first name and the city where you're from, and then ask your question. And we'll get to those questions as quickly as possible, hope to get to as many as possible throughout the rest of the hour. While we wait for that first question, Jim, I have to ask you about something that you alluded to. House Majority Leader John Boehner this week saying, hey, there's going to be no increase in the debt limit without more spending cuts. As you know, extremely fearful, many people, about this. Another period of uncertainty injected into our economy through a debt limit battle. And many economists arguing that just the opposite is what the federal government should be looking at. In fact, I was reading New York Times. Many people read Paul Krugman in the New York Times, economist, who said, if you actually look at the federal stimulus that occurred, and then you look at the state and local cuts that occurred across the country, we didn't have much of a stimulus at all. And so we need more stimulus to get this economy on track. What do you think about this situation with this brinksmanship on the debt limit, and with the fact that there is no political will to do more stimulus?
Speaker Boehner's statement was even stronger than you alluded to. He said that not only would there have to be cuts, there would have to be cuts that were significantly larger than any increase in the debt limit. And I called this earlier a self-inflicted wound. We really do know how to solve that. If we regard the deficit as a problem, the arithmetic of that is so simple. We do know how to solve it. There's no question about that. This is a political game that's being played by both parties here. I think it's time for them not to play this sort of brinkmanship game. I also think that Krugman has been correct on the stimulus from the beginning. I agreed with him early on that the stimulus bill that was passed in February '09, the American Recovery and Reinvestment Act, was far too small, and far too little of it was in direct spending. It was $787 billion as passed, about $813 billion is the estimate of what we actually spent, but all but just under $300 billion of that was in the form of tax cuts. And when we receive tax cuts, we can do all kinds of things with it. There's quite a bit of evidence that what consumers did was to readjust their balance sheets, and what that means is they paid down some of their debt, which is not a stimulus. Okay, the stimulus part of it is tiny. It was about $300 billion, and states and local governments have cut back more than that. I think the initial stimulus should have been 2 times as large, maybe 1.5 trillion, that it all should have been oriented towards spending. That's what gets the economy going. It is apparent that right now what we are facing is a lack of aggregate demand, what Keynes called an insufficiency of aggregate demand. It is not that business cannot produce goods and services. It is that they aren't being purchased and at a rate that means that we'll have rapid economic growth. We need more aggregate demand. There is only one institution in society capable of generating that kind of aggregate demand when expectations are low.
And you've really hit on something important here. I don't think we can emphasize enough. You use the term rapid economic growth, which is, in terms of the labor market, really what we need, as I understand it, and correct me if I'm wrong, we're talking about the need for several 100,000 jobs every month in order to keep up with the labor market growth as folks graduate from high school and graduate from college, and we have that labor market growth.
Depending on how you calculate it, we need somewhere over 1 million new jobs a year to account for population growth or people entering the labor force. That's 100,000 a month would certainly, that'd be handy for the new entrants to the labor force. We lost at the peak of the recession in July '09, we'd lost about 8 million non-farm payroll jobs in this country. We've gained back a little over 3 million, so we're down about 5 million jobs from where we were in December '07. But this is a longer term problem than just the recession. We currently have about 132 million non-farm payroll employees. That's about the same number that we had in 2001. So it's been more than a decade where we have not really had substantial job growth. That would be the first time since the 1930s when that didn't occur. We need a GDP growth rate of somewhere 3.5 to 4.5, maybe 5% for a while to get out of this. You can't expect the private sector to make massive investments in new capacity to produce when they can produce all that we want to buy right now with their existing capacity. And so that means that the only kind of expenditure that can get us out of it is some federal government expenditure. I listened to David Walker on TV the other day, and I generally disagree with what he has to say. He's a deficit hawk that says we've got to fix this problem, the world is ending. It's not ending. But one of the things that he was very explicit about, and you can't find a bigger deficit hawk than he is that we can't do anything in the short run that would put a damper on the recovery. You just can't do it. In the short run, we need more stimulus. Okay, and on that, I couldn't agree more with David Walker, and
that puts it into perspective.
That's a strange thing for me to
Dr. Erickson, I know you wanted to get in on this, and
I mentioned very quickly, regardless of what you think the size of the government should be long run, during the middle of a recession is not the time to right size the government. Because what you're doing, especially if they do what they're talking about with the fiscal cliff, or what do you call it, Tex-Mageddon, I like that. If we allow that to go forward at this point, it's just exactly the wrong time to do it. I was going to mention too that had state and local government spending remained constant in Las Cruces during the last several years instead of declining, that we would not have had a recession in our community. We would have had very slow growth, but we would not have had any job loss. Right now, we're about 1.5% below our peak employment, which is better than the national average by about 3.5%. But we're about 1.5 below our peak employment, and if we were to have back the jobs that have been lost because of state and local government cutbacks, we would be back to where we were before the recession started.
So important perspective, and as we wrap this up, Dr. Martin, I want you to address the psychology of this, because certainly when we talk about something like another debt limit battle, this can rattle the markets, and Treasury Secretary Tim Geithner warned injecting more uncertainty into this economy right now is a very dangerous game. Your thoughts?
Exactly, and I think that may be kind of one of the biggest kind of flags that flying for investors right now is the uncertainty that surrounds this debate, and not only is it going to be a debate about the fiscal, the debt ceiling and so on, but we have an big election coming up. And there's going to be a lot of uncertainty. The market hates uncertainty. So I wouldn't be surprised to see a little bit more sell-off. We're kind of in the sell in May and go away season. We've seen it 2 years in a row. We've seen this movie before. And we don't like going through it, and we don't like seeing it. There is an end to the movie, and so there is an end. There will be a resolution. According to my calendar, we hope it has a good ending.
Absolutely. All right, and we do remind our audience members, please to come to the microphone with questions. Hopefully, as we continue our forum, we'll have questions for the rest of the hour. And we do have our first question now for our experts from New Mexico State University.
My name is Steve Boudreau, and I've been in retail for a lot of years, and I hear optimism when I hear each of your speeches. Yet you talk about the economic driving force. What do you foresee in the retail landscape, say, through the election, but more importantly, over the next 24 months?
With oil prices dropping, that's almost the equivalent of a tax cut. Consumers should have more money in their pockets, and assuming they don't get scared, they ought to be spending it. I'd be more concerned about the retail sector over the long haul in terms of employment. And if you look at the latest projections of occupational or industrial employment from the Bureau of Labor Statistics, retail trade is big. It's right up there. I don't think so, because I don't think we've begun to see the effect of the internet yet. And big box chains are already talking about reducing square footage. They reduce square footage, they'll reduce employment. I don't think the long-term prospects for employment at the retail level are as good as is commonly assumed.
And one bright spot this week, industrial production, the number was positive. It was actually more than what economists had expected, but a lot of that was due to something you already talked about, which was the increase in car sales.
You bet. The airline industry is a little bit uncertain right now. The aircraft manufacturing industry, in part because you've got things like American Airlines that's in trouble financially and may merge with another one. and defense cuts in particular.
Yeah.
We spent 8% less in the first quarter on defense than we did a year ago. And if we start seeing all that, we could be in real trouble there, and that also affects the retail industry. One last thing on retail: if there's a future in retail, I think it's in small, local, specialty stores, not the things that we can buy over the internet.
Okay, good point. Ken?
Just a little bit of a pushback on that thought. We compare Best Buy with Dick's Sporting Goods. I know Dick's is coming into Las Cruces, and we're all really looking forward to that. Best Buy has turned into Amazon's showroom, and it's had its real problems there. So that's the impact of the internet on a big box retailer and employment prospects. But Dick's just reported earnings, and they did a fabulous job. And their CEO is pushing back on this thought that they are a showroom for the internet. And they say, no, we are an example of a big box store that gets retail right, that displays the product correctly, has a good merchandising story, and can do it correctly. So there's kind of two sides to that story.
But it's true what you're saying. Yeah. I mean, with a lot of other retailers, big box retailers, and big chains are really struggling right now. We heard this week the attempted reinvention of JCPenney has not been working well. Sales and revenues way down. Of course, Sears and Kmart continue to struggle, all under the Sears holdings. And this has an effect, I know, on the overall market, because these are a lot of big corporate stocks.
Right, those stocks are down 30% from their highs earlier this year. With JCPenney, it has to be a little bit of, it'll be interesting to watch it play out, because Ron Johnson is the new CEO of JCPenney, and he built the Apple stores up from scratch. There's a lot of high expectations for him in the market. A lot of, I think, re-education of JCPenney customers that's got to go on, because there are no more coupons.
Yeah, that's right. No more coupons.
And inventory management.
That's right.
They're not very good at that.
Interesting stuff. All right, we have another question from our audience.
Pam Wood from Las Cruces, New Mexico. And my question is directed to Dr. Peach, and Drs. Martin and Erickson can respond if you like. But you have mentioned a couple of times, first in your opening statements and then in your response, about the dropping of oil prices. Why do you think, and the ridiculously low price of natural gas prices, why do you think the oil prices are dropping, and do you foresee this to continue to drop in the next few quarters, or start rising up again?
Okay.
I spend a lot of time on energy markets, and my standard sort of glib answer is that I know too much to try to forecast. On natural gas prices, it's clear. We have discovered so much natural gas. It's just literally everywhere. We are flooded with supply. The inventories went up again last week. We literally have to shut down wells these days because we don't have any place to store the stuff. Almost the same thing is true in the oil market in the U.S. We are increasing production. The storage tanks in Cushing, Oklahoma are overflowed. ConocoPhillips recently sold the pipeline, and it's now going to be reversed. It used to go from Houston to Oklahoma, and now, from Oklahoma to Houston, where the refineries are. They're now going to reverse that. We've got a lot of oil floating around. But the most immediate thing is that right now the dollar is strong relative to other currencies, and that has an immediate impact on oil prices. As long as there's trouble in Europe, the dollar should remain strong, and oil prices are, I don't know what they're going to do. I listened to Boone Pickens this morning. He doesn't know what they're going to do. He thinks long term they've got to go up, but in the long run, anything could happen with oil prices.
Yep. For the state of New Mexico, of course, we're an energy exporting state. In particular, we're a natural gas exporting state. And so when the prices of energy fall, that has a negative impact on our local economy. That's particularly impacts us here in Las Cruces via the state budget, since natural gas is a major source of revenue for the state, and of course that goes, the revenue from that goes to fund NMSU and K-12 education, among other activities. Right now, natural gas is at the lowest level it's been, as Jim mentioned. It's been the lowest level it's been in several decades. The ratio of the price of natural gas to oil right now is 50-1. That is a record that's a record. That ratio is at a record level for as far back as we have data, and that indicates that there's going to be some sort of shift from oil to natural gas over the long haul. Now, already nationally, we've shifted a lot of our electricity production to natural gas, and I could see that being even more the case in the future. And the other thing that may be a very long-term trend is switching automobiles to natural gas. Right now on the East Coast, and if you're traveling between Denver and Los Angeles, you can travel fairly comfortably without having to worry about not finding a natural gas pump to refuel your car if you're using natural gas. And as that network becomes more pervasive and more extensive, I think we're going to see people choosing natural gas as an alternative to gasoline. Now, of course, there's a negative to that, which is natural gas. You don't get as many miles a gallon from natural gas as you do from gasoline. Gasoline is a pretty good fuel, but natural gas is so much cheaper right now.
All right, very interesting stuff. And we have another question from our audience. Thank you so much for joining us today.
My name is George Herring. I'm from Las Cruces. And this is directed mainly to Dr. Peach, and it concerns Europe. Now, Europe, I think, is much more than the problem of Greece. They have problem in several nations. And among other things, they are rioting in the streets, and they are electing communist and left-wing parties. And Europe also has problems with people who not only have economic problems, but have social problems. And I just wonder if you think the whole thing might blow up and we have a very black swan that might sneak up on us.
Okay, Dr. Peach.
I don't think so. I really don't think it's in the interest of Germany to break up the Eurozone, and Germany is the key player. And as long as that's the case, I think the lid will be kept on. We do have problems in Spain. The Spanish economy, their unemployment rate of 25% is what we had at the depths of the Great Depression in the United States. Half of all young people in Spain are unemployed. I don't mean to minimize the problems. I just don't see that it's to anyone's advantage in Europe to break up the euro. Greece is kind of in chaos this week because they haven't been able to form a government after the recent elections. In France, Francois Hollande defeated Sarkozy in the recent elections, but that was a very close defeat. And you know what? He and Angela Merkel issued a joint statement yesterday saying that they wanted Greece to remain in the Eurozone and that they were going to do what they could to make sure that that happened. I don't think it's going there. Maybe I'm wrong. Yeah.
Well, we'll watch and see. It is quite striking to see, as Dr. Martin mentioned earlier, close to $1 billion being removed from banks in Greece.
Yeah, $1 billion is not what it used to be. That's significant in Greece. It's not significant
to the world.
To the world.
At least not yet.
It's not a threat to the U.S. economy that $1 billion gets taken out of Greek banks.
Okay, interesting stuff. We have another question.
I'm Joel from Las Cruces. Recently, the Chamber met with Federal Highway Administrator Victor Mendez, and they were talking about the future of the transportation infrastructure and how that was a significant economic opportunity for Las Cruces between Union Pacific and the highways. How can this region best benefit from those opportunities? What can we do to create jobs here?
Well, I think of course, the fact that we have, for example, gave a tax concession to Union Pacific to locate in New Mexico, helping to convince them to make the relocation here, that's helpful. Another thing we need to be very careful about is to ensure that we have maintain a state-of-the-art border crossing at Santa Teresa, because that's key for that intermodal hub to work, that we are coordinating closely with our Mexican colleagues. Foxconn, which is located just across the border, is one of the largest manufacturing facilities in Mexico, and it's expected to grow by 2 to 3 times over the course of the next decade. I think there's about 15,000. Of course, I can't keep up because they keep adding people so quickly, but last time I saw a number, there's about 15,000 people out there making Dell computers, and they're shipping thousands of those across the border every day. That's we need to facilitate that kind of economic development. Now, on the U.S. side of the border, it's likely we may not have the actual manufacturing employment here in Doña Ana County, because it makes sense to put the manufacturing just across the border into Mexico. But we have a lot of support facilities, and we just need to have government regulation and government support of those kinds of that kind of economic development. Low taxes are important. Maintain the infrastructure is important. And of course, those conflict with each other, right? Low taxes, how do you pay for the infrastructure? But we need to do both, and we need to do it in a way that attracts business.
Yes, and hopefully we get a new highway bill that will help with transportation as well. Don't have it yet. Another question.
Hi, Adrian Velarde here from Las Cruces, and I appreciate you all coming out. I appreciate your optimism, first of all. With the $2 billion JP Morgan loss recently, there's been an increased call for more regulation. If that regulation goes through, do you see any long-term effects on the economy, or what do you see it being, a positive or a negative thing?
Well, the bankers are, Jamie Dimon's been leading the charge against increased regulation with the argument that he's playing on a global stage and needs to compete against other global banks. This $2 billion loss is not helping his case very much. There's the Volcker rule that is part of the Dodd-Frank regulation bill that was passed a couple of years ago.
And Senator Carl Levin, just to be clear, because the question was framed, more regulation. Senator Carl Levin this week said if those rules had been implemented, we would have had safeguards to prevent this kind of a trade.
And it's not clear what kind of trade this was. Was this a trade that would have violated the Volcker rule? Jamie Dimon says it would not, but it violated the Diamond principle, which he didn't really articulate, except that this was an egregious mistake, and yeah, they were pretty stupid in allowing that to go forward. So I guess the rule is don't do stupid things. But it's unclear yet exactly how that loss came about. It was a pretty complicated trade. Part of the trade was a hedge on JP Morgan's business, their loan book. Part of the trade, though it seemed from reading the papers, was a bet the other direction on their European business kind of getting sounder, but it didn't.
Well, two things are clear that I would like you to respond to, because I think that there actually has been minimal coverage of these two things. One is that we learned through this that we have this interesting situation. in which Jamie Dimon, as you mentioned, is not only leading the charge, as you put it, to control how our new regulations are implemented, because the Congress passed them, but now the rules we have to decide how we're going to actually implement them. But he also serves on the Federal Reserve, he's a board of directors for the Federal Reserve, and he is essentially advising how his company and other big banks should be subject to oversight. He is an advisor. Elizabeth Warren this week, she said he should resign.
Well, perhaps he should. Well, for one, the Volcker rule has, to my knowledge, not the final version of that rule has not been written yet.
I mean,
but the
what do
financial
you
system
think
is
about
well, the financial system? I mean, it's a complicated place, and you kind of need people on those boards who really understand.
Is the balance
what's
correct
going on.
though, in your view? I
Well,
mean,
I
when
don't
we
know
found
what
out
the
that he is
composition
on
of the board is.
he is on the Federal
Maybe
Reserve
Chris
Board, and I should make clear
knows
she
something.
asked him to resign from that board, not from his CEO
Not a CEO,
position.
right, yeah.
This is a big question. The other thing is it's more than just leading the charge. CBS News reported that J.P. Morgan has spent more than $21 million lobbying in the last few years, and CBS News says much of that lobbying is to fight implementation of the Dodd-Frank reforms. What is that? Is that kind of a situation sustainable, Dr. Martin, where we have corporations spending that kind of money to fight regulations that have been passed to safeguard us from another financial disaster?
Well, yeah, there's another side, I think, of this story that I read about this week, and that is, well, how was it that, what are the incentives that gave rise to this kind of trade, and then hence this kind of loss is possible? And from the bank's perspective, they are in a low return world, and they want to increase their returns on capital. They can't do it the way they used to back in the good old days before the financial crisis. And so it may be that these regulations kind of, or the prospect has pushed them more towards the edge of this kind of trading that can lead to this kind of loss.
Okay, we're running out of time. Dr. Erickson, you wanted to get in, and then
Well,
Dr. Peach?
Yeah, I know we're short on time. I'll just mention very quickly, it's important to remember that what's the best regulation from the perspective of the bank may not be the best regulation from the perspective of society. I have no doubt that the Volcker rule will reduce profitability of banks because it restricts what they can do in terms of trading in their own name. The question is, should we allow banks that benefit from a too big to fail safety net, which banks like J.P. Morgan Chase do, that we should allow them to engage in highly risky activities? And I would say probably not, because it's our money.
We've got about 30 seconds, Dr. Peach.
And real quick, this is not new. What J.P. Morgan just spent is peanuts compared to what Citibank spent in the mid-1990s to get Glass-Steagall repealed. They spent literally hundreds of millions of dollars over a 5-year period to get the law that separated deposit banking from playing on your own account and from dealing with insurance.
Good place to wrap up.
Good place to quit.
It always comes back to campaign finance reform, no matter what the subject is we are talking about. Well, thanks to our guest from New Mexico State University and to the Greater Las Cruces Chamber of Commerce, we leave you with a reminder of the growing importance of the arts in our community. The Chamber Spotlight is on the Doña Ana Arts Council. Have a great week.
My name is Ceci Vasconcelos. I'm the Executive Director of the Doña Ana Arts Council. And the Doniana Arts Council is a nonprofit organization whose mission it is to promote the arts and improve the quality of life through the arts for the people of Las Cruces and southern New Mexico and Doniana County. The Renaissance Arts Fair started as a small crafts fair. It was actually called the Renaissance Crafts Fair. And we just celebrated our 40th anniversary, and it draws 25,000 to 30,000 people over the weekend, and it's one of the most popular events in Las Cruces and that we have. The Rio Grande Theater is a historical theater. It was opened up in 1926, I believe, so it makes it almost 100 years old. And it's one of the only two-story adobe theaters left in the United States, if not the world. People who perform here just love the sound of the adobe, and I think we can bring some really top-notch talent to this theater. It's definitely an icon of the downtown now. The whole community of Las Cruces can come here and really appreciate what we can do with this theater. We do live performance, we do music, we do dancing, we do theater, and we also show movies. We've had everything from just the local songwriters to actual bands that are on the verge of becoming professional. And some people who have done this as professionals and just do it now as a hobby. So you get some pretty good performances. For the Arts Council, we hope to continue growing our programs for children, but really make this a destination for people to come and see the arts. And we just want it to be accessible to as many people as possible.